So, thank you again for joining us for another segment episode of Can I Ask a Question? I am so grateful and thankful and honored to have with us today Miss Gina Richardson. And almost kind of like a mama bear on her too. So, I mean, it's woman to woman, but sometimes I'd be like, you should be like, okay, okay, ma, I got it.
And I
But
receive it.
I, but I am so grateful and just so honored how God orchestrates relationships.
Yes.
And your relationship with me is a very tender relationship. So I guess that's why I have that motherly, emotion towards you. But when it comes to finance, I'm the child. I allow you to teach me. So today I want you to share with us. And as you know, September has really been about mental wellness and self care.
Yeah.
And we've already dissected what is self care, what is mental wellness. And then our next segment uh, spoke about high blood pressure, where I found out I had high blood pressure. And then she
Mm.
also introduced diabetes to us and understanding that women of color, Black women, are high in rank with diabetes and hypertension.
Mm-hmm.
And then the one that is airing before yours is speaking about spirituality, that tethering, that connection with God, how it just brings forth that peace and that serenity and that calmness, where we should not be anxious for anything, therefore taking care of our mental wellness and bringing forth self care. But as I was joking with you, this is my favorite little coin purse right here.
I see
And
it.
I said, Gina, mama need more money in here. So
Don't we
we're gonna
all?
don't we all? So
Yes.
we're going to discuss that, and we have some awesome questions that have been sent in to us
Okay.
to be presented to you. So before we start, I always say I never want to under introduce someone. I always want them to feel free to share with us who they are, and so we could learn more about you. So, my love, if you could please go ahead and introduce yourself.
Yes, thank you so much. And thank you so much for having me here. I'm super excited. And so, hello, everyone. My name is Gina Richardson, and I like to call myself your favorite money accountability partner. I'm your favorite friend that's going to talk about money. That's what I normally address and tell people on my podcast, just because I love to talk about not only financial topics, but I love to make sure that everybody understands these topics so that they know how they affect them, just because everything that we do in life revolves around money. I grew up with the saying where people would say, oh, money isn't everything. And not that money is everything, but we needed to do every single thing that we want to do in life. So you have to understand it. So I'm that person that helps people to understand and digest money, financial topics, credit, debt, all of those things. And so I'm just a girl from Chicago. Some people would
Chicago.
try to play me and say, okay, well, you lived outside of Chicago. I lived in the suburbs 10 minutes away from Chicago. So I'm going to use Chicago, everybody.
Okay.
And so I'm just,
Use it.
yes, I'm going to use that. And so I'm just Renee's daughter, which is my mom, who is deceased now, but I'm Renee's daughter. I'm just a girl who loves to skate and talk about money.
All
So yeah.
right. So let us skate on into the topics at hand.
Yes.
All right. Thank you. That was a good segue. We just will skate on into
Yes.
it. So, as you know, as I had stated, what we have been discussing, one of the questions that came, and it kind of like, wow, this was a good one. She says,
Okay.
I am 52 years old.
Okay.
I just started working full time. So she's 52, just started working full time.
Okay.
I do not have a savings account, a IRA, or a KEO. What should I do?
What was that last thing that she said?
I think she says she said IRA, but I think she says like a Roth KEO, maybe Roth
Okay,
IRA.
because I'm thinking of like a retirement, like
Yes.
401k plans
Hmm.
or things like that. Because I know you have your traditional IRA and then your Roth. Okay. So she wants to know how to start saving. I want to make sure I heard that correctly.
Correct.
So depending on how much money she makes, she needs to understand how much disposable income she has after her taxes and how much discretionary income she has allotted that she's able to save. So we all make a salary, right? And that's the reason why when people will tell me, oh, my job pays me six figures, and I'm just like, okay, well, how much of that goes towards your expenses? So she really needs to understand whatever her income is after taxes, what all of her expenses are and that money that's left over. So that way she can designate how much money she can save. Now, off top, she should be saving. Hopefully her employer has a 401k, some type of retirement planning, 401k, 403b, whatever it is that they do, TSP for military folks and government folks. She should be submitting how much, like, I'll give an example. Most jobs, they'll match. Like they may have, if you put in 3%, we'll match that 3%, or we'll match you up to 4%. So she should at least be doing the bare minimum in that retirement plan through her company by putting in those funds there. On the other side of that, depending on how much money she has after her expenses, saving to start with a good 10% and working your way down. I don't know exactly how much money she's making because I don't know exactly where she's at. I always say start small. My first savings was $25 every month, and that was at the age of 30. In the situation that I was in. And so as you're able to increase that, depending on how much extra money you have after expenses, she should be able to do that. But I would definitely recommend getting started, opening the savings account, setting up an automatic transfer that comes directly from her check. Don't try to trust yourself to make those transfers, just because even for myself, I worked in the financial industry 15 years. I don't even trust me. I would have my savings go directly from my check, not even come to my account, then transfer directly from my direct deposit is how I had my savings go, just because I know that I can trust that. So that would be my advice.
Trust the process.
Yes, exactly. And you got to start small until you're able to get up there, just because once you start, and that's the one thing I love, because it's like once you start and you start building that savings and you see, I'm actually doing it. Even if you are starting with 25, 50, 75, 100, whatever you're allowed, whatever you're able to do, just because I know everyone isn't in that position where they can save thousands of dollars each month, so you may have to start small. It may not be hundreds yet, but you'll get there. So just trust in the process, like you said.
And so, Gina, question regarding her, like it just kind of made me go back to think, what type of savings account would be best for her? A regular savings, a money market, one that you could draw in and out, or what would be the best one for her?
That's a great question. So I would say, depending on the amount, if she's going to start with less than $1,000, I would say a regular savings account at a credit union. Just because credit unions, they're not going to charge you those fees. And traditionally, you're going to have banks where they will, if you don't have a certain amount or keep a certain amount in there, they're going to charge you those fees. So it just all just depends. But I would say a regular savings account, if it's under $1,000, if she's starting that account with $1,000 or more dollars, to look into something called a money market account. Money market accounts will earn you a little bit more interest, not a lot, just because of the day and time that we're in right now. Interest rates are still a little small, but they will earn you something. So for example, my money market account right now, I earn probably between $14 and $20 with the amount of money that I have in there each month. So that's something while your money is just sitting there. So I would say a money market account. Now, if she wants to save in chunks, so say quarterly, she decides, you know what, I'm going to save up to $1,000, and every quarter I want to put this money in some type of holding field. Like, so there's something called a certificate of deposit, which is a CD. I would say if you save in chunks, go ahead and earn up to the amount of money you want to save to. So I use the example of $1,000 and put that money into what's called a certificate of deposit.
And what is the lifetime of a certificate of deposit?
It just depends. So you have some that are short term. I would recommend at least something for a year or more, because they go up to 5 to 6 years, just depending on which financial institution you use.
So savings, as you have suggested, with the credit union would be the
I like credit unions, not to knock banks. Banks are fine, but I just like credit unions. Credit unions just feel more community focused. Their interest rates for savings are always going to be higher. The interest rates for loans are going to be lower. I'm just a credit union girl all around. So it's like, if you can, I would say a credit union, but if you have to use a bank, check them out and just be sure you really want to do business with that bank.
Yeah, because they don't give toasters anymore, and they charge you for everything.
So. They don't. They do. They have fees.
They have fees.
Give me one moment. I just have to get a tissue. I just realized my nose is running. Give me one
take your time. Hey, we're living real life. Go ahead. Because I have another question coming up for you. And this one is like a wow one. Yeah, no problem. So, hey, folks out there watching us, this is real time, real life, and this is how we
Yes,
do. All right, and this is called modern technology.
there you go.
Hey, so this question is from a parent. She
Okay.
says, I have three small children. She didn't give the age. She says, I have
Yeah.
three small children. Do you still offer Christmas savings accounts? Do they
Yes.
still have that?
Yes, they still have those. So mostly I
Okay.
see those majority at credit unions, but I think banks may have them. I'm not too sure. And I've worked at banks too. It's just like I don't remember it as much at the banks as I do the credit unions that I've worked for. But yes, I have a Christmas savings that I use every single year. And I make sure in November when all of the funds are available, I use that for Christmas or whatever it is I'm going to do for Christmas. So for
Mm,
me, my kids are older now. So they're 14 and 17. They get experiences. They don't get gifts anymore.
okay.
So we don't even do that. But yes, Christmas club accounts do exist. So I
And what
definitely
and what would be the minimal amount that
I feel like it's $25. That may be a good starting point. It may be $5 at some places. It just depends.
now would this be in the mother's name or would it be in the children's name?
You can have it in the child's name. So if you
Yeah.
want to save, because you can get a savings account for someone as long as they have a social security number, like grandparents. You have tons of grandparents, aunties, uncles, of course, guardians who start accounts for their kids, nieces, nephews, or whomever. You can start that account for them in their name. So it just all
Mhm.
just depends on what you want to do and how you want to access that. So say if it's a parent for a child, I would recommend the parent getting that in their name because they can have, I believe they may be able to have multiple. Just check with the institution that they want to start that account with.
Okay, thank you.
Mhm.
That was a good question and a great answer.
Yeah, that's real good.
Yeah, because I we did that back when our children were small, and like you said
Yeah,
again, it was for to be able to make purchases for them
yeah.
at Christmas time.
Hmm.
Now this one, have you noticed? So we're still kind of under the dark cloud of the pandemic, but
Yes.
have you noticed since then, since we've kind of come out into clarity, have you noticed any type of urgency or eagerness for women to start more savings accounts?
Hmm. I'm not gonna say that I've noticed that. What during you know what, I'm gonna say kind of iffy a little bit. I have seen a rise in women holding financial seminars and wanting to know more about financial education. I've done a lot because I was already pre-pandemic doing a lot of workshops with women where we talk about finances and talk about, personal finances more so than anything. So I can say that on social media, I see that there's been like a bigger push seeing that, and you see companies where they want to have, because back I've been in banking a long time. So back in the day, they wouldn't want you to really say, oh, this is a women's only financial
Yeah.
educational workshop. Whereas now you see that where you have these companies who have what's called their business resource groups or employee resource groups, and they want to have women only functions where they talk about financial wellness just because, there is a need for it. There's been a need for it, I guess, for me, but it's just like, I guess I will say that there has been a rise in that on a push through social media. If I have
Mm,
to, yeah, that's what I would say.
okay, perfect. And then here's another one. Um, she says, I received an invitation, and I received one of these too, but it's not similar to hers. She says, I
Yeah.
received an invitation for a free dinner if I come to a financial seminar. What are those?
Oh my goodness, that sounds like a scam. I don't know exactly
Well, can I
a
eat
free
dinner
dinner
first?
because it's like a free dinner because I'm trying to figure out like
I
who's
think
sending
it's
like
an investment. I think it's
going
like investment. Yeah. But can I get a
who's
free
sending
dinner?
that out. But there are people because my main
I'm
focus.
sorry. You said scam.
It feels like a scam, but I don't know. Let me stop. I don't know. Everybody, I don't know. It may not be a scam. I don't know. Maybe it's
Don't
right.
go. Don't go. Don't go.
Yeah, I don't know. I wouldn't go. I don't know because it just don't feel right to me. But who am
Spirit.
I? So I don't know because it's like you do have a lot of people, like the people who sell, and this is no slight at anyone. You do have the investment side, the insurance
Mhm.
side, where they will have perks like that for attending workshops where they're able to talk about their products and their services. So I would just say, make sure that it's a reputable source. See if that's something that you really want to do, see what all is going to be detailed there. Make sure you know what the fine print is, for the attendance there. If you have to give up any personal information, then that's when I would say, all right, hold on. I don't know, so I would say making sure to check all of those boxes first to make sure that everything is good.
Now, you said something about investment. What was it? Investment groups or?
Investments and insurances. So you do have
Okay.
the investment industries where you can make, your mutual funds or
Oh, I
your
see.
normal
Okay.
investments or annuities, and also insurances where you have your life insurances, whole and term, and all of those different items, those different products and services. They, in that industry, they may have a little bit more of that ability to say, hey, we're going to give a dinner voucher to every single person that comes, just because they do want to make sure that people hear about their products and their services. So
Mm-hmm.
I can see something like that for that industry, but I don't know. It just depends on, what is this financial education workshop about? Like, what is this? Like, I would steer clear.
Stay clear.
I would.
Miss Gina said stay clear. No, stay
Seriously,
clear.
I would just make sure, only because it's like, I can remember, and the only reason why I say scam is because my mom, before she passed in 2018, she was 59 years old. I say that age just because my mom was very vibrant. She understood things very well. I remember everyone at her church received an invitation about receiving some type of grants. It was like, I still have the text message. Someone was giving out a grant, and they had to pay $1,500 to receive $50,000. So, and they all had to do I think attend something. So it was a lot of different things. And that's the reason why when you said that, I'm like, that feels like a scam.
Like a scam. No,
Because
no,
it's very reminiscent of a scam that my mom came across back in 2018.
And it doesn't hurt if anyone that's watching, listening, if you do receive some information like that, you can always go to the Better Business Bureau
Exactly.
and do some research on these organizations. And even
just
with
make sure.
Secretary of State, even go to the Secretary of State's website and do some research. So yeah, that's good advice right there.
Exactly.
So here's another question. What type of credit cards are best?
Oh my goodness, this is a great question. So to me, all credit cards are fine. It's just the person. It's the person.
All credit cards, as long as they go through, they good.
Yes, all of the credit cards are, for the most part. Now I'm just playing. Let me not say all. My favorite, excuse me, my favorite credit cards are through American Express. American Express is just, I don't know what it is about this card. I just love it. They're just great quality cards. Now, the thing with credit cards, and a lot of people will say the interest rates on them, it all just depends on the user of the card. What are you using this credit card for? Are you going to be maintaining a balance, or are you going to pay this credit card off? And the reason why I say that is because I have probably about a good 13, 14 credit cards, because throughout my time, I'm 37. So throughout my time of living, I've had my credit cards that I got when I was younger, that may have had the $500 limit, the $1,000 limit that I just kept. And then I have, once I've gotten older and start getting those big girl limits in the double digits. And so I've kept those credit cards, but I don't use all of them. It just all depends on what you're needing, because store credit cards have a purpose. My trilogy of cards is New York and Company, Express, and Victoria's Secret. I keep those cards because during their sale times, I'm going to use them because I want to make sure that I have the coupons. I use them, I pay them off. I don't care about the interest rate because my purpose is to use them and pay them off, so I don't pay any interest. When we're talking about everyday credit cards, like I said, American Express is one of my favorites. Capital One was one of my first starter cards. They're still pretty good cards. Discover is a good card as well. Credit Union credit cards, great credit cards to have, and your bank issue credit cards. I'm going to say that's going to be my line of which cards I think are good. But the main thing that I feel that people need to really understand is, what is your purpose for using this? Is this your card that you're using for emergencies? If you do rack up a balance, do you know how to create a plan so that you can pay that off. Just because
Right.
for me, I don't care about the interest rates. I have credit cards that are 28% interest rate. I have cards that are that have annual fees, like my Southwest credit card. It's an $18,000 card, but I get so many points because I fly Southwest. It's worth it for me. So it all just depends on what the card is, what benefits you're going to that you're going to use from that card, and how you're going to pay that, what repayment plan you're going to have on that credit card.
Yeah,
Those are
and you
those
should
are
have that.
important.
Yeah, and that strategy should be in your mindset even
Exactly.
before you take it out,
Exactly. I would say this, and I did some videos about this. I think I did a podcast episode. I would take out credit cards according to the benefits that I need. So for me, Southwest has a credit card. I got that because I fly Southwest. When I'm using that credit card, I earn points. I have a Hilton credit card that's through American Express. I utilize Hilton hotels. I love their hotels. So when I'm using that card, it gives me points so that I'm able to use towards my stay. So I would make sure that the benefits of the credit card match too. So that way, while you're spending, you're also earning something,
Right.
and also making sure that there's some type of plan in place for if you are spending on this card, what does your repayment look like? Am I going to pay it off every month, or am I going to make some type of repayment plan to pay it off in time?
Perfect. All
Mm-hmm.
right. I hope she's listening because that was good. I like that
Yes.
one myself. All right. So this one comes, can, so I don't know if it's a lady or a man, male or
Okay.
female. It says, can you refinance student loans?
You
Can you
can.
refinance student loans?
This is a great question. I have a series right now talking about student loans. And so,
Okay.
yes, you absolutely can, but you have to really pay attention to what type of student loans do you have? Because if you have federal student loans, those are your government student loans. Those are the ones that are protected by all of the governmental programs. So currently there is a pause on all of our federal student loans. And so that's only for federal. The private student loan holders didn't get a chance to take advantage of that. So if you have federal student loans, you would have to go through the government to see their consolidation plans that they have. I would say if you don't find a consolidation for those federal student loans, to keep them federal. I would not recommend consolidating them into a private student loan. That's just me. That is me. That is the smartest option, only because you don't get a chance to take advantage of the income-driven repayment plans.
Mhm.
So for someone that wants to consolidate, I would also tell them to consider income repayment plans that the government offers. Their new plan is amazing, that they're launching, that's coming up. I believe it's starting in November or December, and maybe the top of the year. I'm not too sure because it literally just came out. So I would look into that, but I would not refinance federal student loans into, say, like you go to like a bank or a credit union and get a loan for whatever that amount is. That would be refinancing that into what was called a private student loan at that point.
But the
So
consolidation would be on the other one.
yeah, so
On
I would say consolidating private student loans. Private student loans, of course, are those student loans you get through other sources other than when you fill out your FAFSA and they say, hey, we're going to pay this. Those subsidized, unsubsidized loans, they're ones that you can get from regular banks. You can also get from student loan finance companies. I would absolutely recommend consolidating those types of student loans. It would benefit them in the end. Yes.
Okay, so consolidate, so just to make sure we have it
Mhm.
correctly, consolidation for non-federal
Yes.
government loans.
Yes.
If it's federal and government, leave it the way it is because there's
Yes.
programs out there that may
Correct.
benefit you.
Yes, so taking advantage of for federal student loan holders, taking advantage of the forgiveness programs that are available to you, and also the income-driven repayment plan programs that are given to you as well. Yes.
Okay, awesome. Thank you for that. So, my coin purse.
Yes.
So, is there anything, because we want to make sure that our listeners are getting this information, because we know that when money comes up, I mean, it stresses you out,
Yes.
you're all unbalanced, the car breaks down, you need tires, the roof is
Absolutely.
leaking. I mean, stuff just happens,
Stuff is always happening.
always happening.
Uh-huh.
And what advice would you like to give before we end about managing your money so that you can manage yourself to just stay mentally well, but at the
Yes.
same time taking care of yourself? Because I noticed during the pandemic, a lot of ladies said, "Oh, I'm gonna take off my nails because the nail salon was closed," or "I'm
Yeah.
not gonna wear the lashes because I'm not going anywhere." And then
Yeah.
they realized, like, "Oh, I was spending a lot of money," but then when everything opened back, we went right back to it. So, um,
Exactly.
understanding
Yeah, so
money.
I feel like we all have a lifestyle that we want to live, right? So how much does your lifestyle cost? And I feel like when we're taking those self-care moments, we need to take some time out to have that financial care, that financial self-care moment where we can really be realistic with ourselves with what is the lifestyle that I'm living? Where do I want to be? Because it's just like sometimes we're in a space and there's still some things that we're seeking. So you need to be very clear, just like we're very clear on our career goals, we're very clear on when we want to go on vacation, the other things that we want to do. You have to be very clear financially and not just throw spaghetti at the wall. So looking at your life, what does my lifestyle entail? What does those expenses entail? Are there expenses that are coming up? So understanding, writing that down. I'm a big believer in writing down things just because I feel like when you write it down, it's going to come to pass. I don't know what it is. It's just something
It's
about
the word. It's the
it.
word, Gina. It's the
Yes, it just
word.
keeps me. It's just like, so I just be like, oh, let me write this down. And
Write it
so
down.
being very clear and mindful of where you stand. Where do you stand financially? Understanding, having that budget to understand the things that I need to live and the things that I need to maintain my living. So you mentioned with nails, with lashes, with pedicures and things like that, that during the pandemic time, we didn't have. A lot of us I saved so much money during the pandemic. And I was like, I got to go back to this, shut this place down just because I saved so
No.
much money. But then you do realize
Yeah.
what are the things that I really do need and what are the things that are just wants, or what are those wants that I can decrease. And I feel like we have to do that in our everyday living. So understanding where you stand, how much money you make, the expenses that you have that you need to actually live, the maintenance costs that you need for yourself or your family, understanding what those look like, see where you're at there. If there's more money that needs to be made, you'll be able to see that by looking at that. That's not a number sometimes that we want to look at,
Right.
but we need to see it. What are the goals that you have? Where do you want to go? Because anything that we want to do when it comes to vacations or any other goals, any lifetime goals of starting businesses, things like that, those things cost money. So understanding what are those things that I want to do, what is going to be the plan for me to be able to have money go towards that so that we're able to accomplish those things. Just because when it comes to it, when it's in our head of this is how I should be living or this is what I should be doing, you want to make sure that you're doing all that you can to manage the financial side of it, to make
Right.
sure that those things, you're able to have those things that you want, because it's going to stick with you. So understanding that, taking that time to mainly budget, basically
The
budget that
budget.
out and see what that looks like and stand abreast of, all right, where am I at? Setting those goals up. If savings accounts need to be made so that you can reach those goals or those things that you need to do, or separate some cash so that you're able to do the things that you need to do. That's what I would recommend doing. So that way you can always steer clear of where it is that you're at and know if there's something else that you want to do, you will see where you're at. So that way you'll know if you could do it or not.
Mm. That was clarity right there. So
Yes.
thank you. So in finality, just if you
Yes.
could just give us a roundabout so our listeners and viewers will understand, what should a budget look like? Just a plain old, let's just sit down at the kitchen table. What
Yes.
should I be budgeting for?
Absolutely. Oh, this is one of my favorite questions. And I just put out an ebook about this one. So I definitely will send you the link for this. And
Okay,
so
yes, we can put it in.
yes, when it comes to budgeting, three categories, literally how much money you make, how much money you're spending on expenses, and how much money you have left to save, right? So you have your income, your expenses, savings. What does your income add up to? What do your expenses? And when I say expenses, I'm sorry, I'm under the weather right now, everybody. So I
No,
apologize. But when I say expenses, every single thing, like I'm not just talking about your rent or your mortgage. I'm talking all the way down to that Starbucks run that you may have, or
or
the
they may
maintenance
have to stop
costs.
the Starbucks run.
Yes, because that's where you'll get a chance to see. All right, do I need to stop this? And so making sure, so I'm a writer down. I like to write things down. Other people like to utilize apps, or they may like to utilize Excel, but making sure that you're keeping up with your transaction registries for those people who spend on your like debit cards or credit cards, keeping up with how much it is that you're spending so you can understand what your expenses really look like. So that way, if you need to decrease, you can say, oh man, I went to Starbucks 18 times this month. Okay, maybe I need to cut that down to 5 or something like that. But knowing what all your expenses are, even those ones, like for myself, I'm a girl, I love to go skating. So if I go skating, I know that that's going to be, okay, when I'm in Chicago, it's $10, but when I'm out here, it's like $25. I know. Right?
Why are you talking about it?
Right. It's just too much. It's just too much. So I know that $25 expense I'm going to be paying every single time that I go skating. I may go to breakfast or something after that because it's normally late night. So adding up all of what your expenses are so you can see how much it is that you're spending. And then when you add up those expenses and you see, I need to cut back somewhere. You now know, you have a blueprint of, I'm looking at this. I need to cut back here, and you're figuring out what those solutions are going to be because it's you. You're the one that's doing it, and then also those categories to save. We talked about earlier, things are always happening, right? We're old enough to know that if it can happen, it's going to happen, right? If we have vehicles, we know that maintenance is going to happen on that vehicle. When gas went up super high, like we were paying way more for gas, and that's something that we couldn't avoid. For people who have houses and you need to have things repaired, things like that, you should have savings for those things. I separate my savings because I don't like to have just one. I like to know how much do I have in my auto account just in case if I need to get an oil change, because my oil changes are almost $100. How much do I have if a tire goes out? All of that goes in, that's in my auto savings account. So I would recommend categorizing your savings and seeing, after you have all those expenses, how much can I put away to save for those things that I'm trying to maintain as well. So yeah. So just those 3 categories.
Love it. And that was easy.
To me, that's what I do. Like, I have a sheet of paper, I put income, expenses, and then I put savings, and I add all those categories up because your income is your income. Like,
that's coming in.
That's where it's at. We either gonna make more money or what? Like, this is where it's at. So expenses can't exceed income. Savings can't exceed income. So it's just, you have to make sure that you're looking at that. And that's the reason why I said be mindful of where it is that you sit, because a lot of people aren't mindful of that, and they make unrealistic goals and they have unrealistic thinking about their finances.
And that's why it's called Mindfully Rich.
That's right. That is exactly right.
That is right. The name of it, Mindfully Rich.
That's right.
I love it. So before we leave, before we end, just give us a little bit of why, because you've had a recent career change.
Yes.
And it started with a bang.
Yes.
So just share too, if someone wanted to contact you, give them a little information about the brand story and how they could, your information will be, under the video, but I just want you to take this time because I greatly appreciate and value you, your time, your knowledge and information. So to end this, just letting everyone know to stay well, to take care of themselves. You got to watch your money, but tell them about the brand and how they could contact you if they have some additional questions, or if they want to hire you to be a consultant for their organization or come speak at an event. So take that time to go and share with us.
Yes, of course. And so everyone, I started the Mindfully Rich brand just because this was a goal in the making for me since I was 12 years old. So when I was 12, I grew up in Markham and Harvey, Illinois, and so right outside of Chicago. So I come from humble beginnings. We weren't rich by any means of the imagination. It was a 900 square foot house, 1 bathroom, a whole bunch of people living there. And for the most part, that's what I knew, right? I didn't know that we were in a different socio class, or what socio class we were in, just because everybody around me were doing about the same. But when I was 12, I started visiting my rich cousins. I called them rich. My rich cousins in Grand Rapids, Michigan, and they had a big house. So for us, a big house was upstairs, downstairs. And yes, we get it. It's called 2-story, but in my community, it was upstairs, downstairs. Okay. So when you had that, it was rich. Okay. So they had an upstairs, downstairs, and they would go out to eat just because it was Tuesday. I had never been out to eat before. I was so used to eating Thanksgiving meals every single day. Look, let me tell you. So I was like, we going out to eat. My first restaurant I went out to eat when I was 12 was Cheddar's. And I was like, oh my goodness. Like, I remember this, like my cousin now, he's the COO of YMCA, right? Young man, I mean, doing great. And I can remember the server came to the table and said, here's your salad. What type of dressing do you want? I whispered to him, tell him I want the orange one. Because I had never been out to eat before. I didn't even know what the orange one was. It was French, right? It was French. Catalina. French Catalina or whatever it was. And I was just
that's
like,
what it is, French Catalina.
Yes, I said, tell him I want the orange one. Because I had never been out to eat before. So I was like, I like this life. This feels pretty cool. And when we would go to the mall, their dad, my cousin, he would give us some money and just say, go through the mall and go spend. I was like, what is this? These people are rich. How do I do this? Like, I got to do this because I'm not used to this living. You know, my humble beginnings were great because I want everybody to think my humble beginnings were great. But when they was doing all that, I was like, look, I want to be rich like this. And so I'm a deep person.
The narrative.
Yes, that changed me right then and there. And so I'm a deep person. I'm very mindful of things. I'm very empathetic. I'm very intentional. And so Mindfully Rich started then, but the brand itself built when I was like, I want to talk to people about money in a way that they can be mindful and understand that being mindfully rich, although financially, it has that aspect of financially, but spiritually and mentally. Just because when you're not mentally and spiritually rich inside of you, you make bad financial decisions. And so all of that works together. And so I wanted a brand where I'm able to talk, people can see someone that looks like them. It doesn't feel hard just because finances typically aren't coming from, well, nowadays it looks way different. But when I first entered the financial industry back in 2006, you wasn't seeing like young Black girls like myself just out here in corporate America that were so like geared up for financial wellness. And so I wanted to make sure that you could hear about finances and digest it and understand it from someone who looks like me, but also put a twist on it where I could talk to you about stories. I've helped hundreds of thousands of people in my time working in the industry. Excuse me. I've had all of that. I've had some things that have happened to me, and I like to share stories of that just because I'm a storyteller. I feel like we learn best from stories because sometimes, you know, you can tell somebody, don't do that, the stove is hot, but they still got to figure out that the stove is hot. Now I tell stories to say, hey, I went through that. This is what that story looks like. And then now people are like, you know what? I don't think I have to go. I don't have to learn this hard lesson.
This is the burn on my hand.
Right. Instead of getting the burn, I'm the one that's telling you that. So I developed the brand and I started it with the podcast. So the podcast, which is 104 episodes in, and then I started the consulting myself. And so through consulting, I call myself a coach and a consultant because I coach. I have one-on-one clients where I help them with managing their money or lowering their debt, increasing their credit because they're trying to make a big purchase. And I also have the workshop side of things where I use my consulting, where I can consult with companies who want to offer financial wellness to their employees, to their audience, and we can talk about whatever topics it is that they want them to hear about, and I produce that for them, curate that for them. And so I started the consulting coaching side of this about going full time now 3 months ago. I left my job. That was something I stepped out on faith with. And so you remember that day when I came in, I was working in this industry for a long time. I was doing so good. I have great character and I am a principled person. I will never let anyone try to tarnish or defame my name or also use me. And so because of that, I decided to leave my job and go out on my own because I believe in me. And I've called this my betting on me season. Just because I know what it is that I have to offer, I feel like God has been speaking to me about what it is that I need to do. And I'm just walking out on faith in doing so.
And writing it down.
Yes.
Write it down.
Yep. That's right. It's
Yeah, I
on my
do
vision
remember
board.
that day. But that
It's on
was
my
a
vision
great
board.
day. That was a
Yep.
great day. That was a
Yes,
great
it
day.
was.
Yeah.
Yes, it
And
was. It was a powerful day, and I still keep that. That's a part of my testimony.
it was a great day.
It
Well,
was. And so,
Miss Gina. Oh, go ahead, my dear. What
yes.
were you gonna say?
Oh no, and so I was just gonna say, so everyone can find me. You can go to my website. I am mindfully rich just because I believe in affirmations. I believe in manifestation. So I am mindfully rich is my website where you can find my services. You can find me, my brand story, what I'm all about. I'm trying to think. I'm on Instagram. That's my
Yes,
main source of
yes.
social media. Mindfully rich. I'm everything mindfully rich. Everything across the board except Facebook. Facebook, I don't know. It's something about Facebook after my mom passed, and I just can't be on there like that anymore. I don't know what it is. It's something about it, but I haven't been on Facebook like that. So my main channel is Instagram right now.
Instagram. All
Yeah.
right, Miss Mindfully Rich. So I'm so happy that you came, Gina, to share with us
Yes.
today, and we'll make sure all your information is there. But
Thank you.
I just love your passion. I love
Thank
your
you.
openness and honesty. But most of all, I love how you want to inspire others. And this is what this
Yes.
platform is all about, is to
Yes.
motivate, inspire, and encourage. Even if you are
Yes.
starting that savings account with $25,
That's right.
just go and start.
Just
Just
do it.
start. Just start.
Mm-hmm.
And it'll all work out. Just
That's
start.
right.
All right, my love. Well, I thank you so much
Yes,
for
of
being
course.
with us. And I just pray that this information will touch someone, that they can just pause for a moment and just listen, take some notes, and then now just focus on what they need to do to become mindfully rich. Because we serve a Father that is exceedingly and above
Oh,
beyond.
that will bless us exceedingly and abundantly. And and while I'm talking about it, so if anyone is interested, because I do have my ebook where I talk about how to thrive financially, and which talks about budgeting practices. I have a framework that I use that's really, really good. And I also have affirmations. I have 24 affirmations right now that's on my website as well that people can utilize so that they can speak life, because I absolutely do believe in speaking life over your finances. I've done it. I don't know no other way to do it.
Do it.
Putting that good energy in the air. I'm not one who likes to say negative things about my finances, no matter what it is, no matter what it looks like. We serve a God that is too big to have us somewhere in a broke house. So
In a
no,
broke house.
that's
In a
right.
broke house. Not the broke house. Ah!
That's right. My
Wait,
God, we are
let me
queens.
let me do this.
I know, right?
That's gonna be it. No broke house here. No
That's
broke.
right. No broke houses. We speak in abundance. We speak in life over here. Okay. So that's
Wait,
that's gonna
my coin purse got a little bit heavier.
that's right. That's right. That coin purse gonna be to the ground. You're gonna be like, this was coin purse, like, that's right.
I
God, we
love
serve a
you.
big.
Mwah. So thank you. I thank you. And for everyone that's listening and watching you, we pray prosperity over your family. And
Yes,
prosperity is not just finances, it's about your mental wellness. It's about
yes,
taking care of yourself. It's about loving yourself, loving your
yes,
family, loving your community, but taking the pause to understand that you are so important. So take care of
yes.
yourself. So until we see you again, remember that you are victorious and we love you and we will be praying for you. I love you, Miss Gina. I'll see you
Love
soon.
you too. Thank you.
Thank you. All right, let's go.